Broken markets and economic catastrophe if the debt ceiling issue is not resolved. Let's jump in and take a look at what is going on. Janet Yellen warned of broken markets, disrupted services as she ramps up debt ceiling pressure. A default would crack open the foundations upon which our financial system is built. Yellen warned in prepared remarks. It is very conceivable that we see a number of financial markets break, with worldwide panic triggering margin calls, runs, and fire sales. That was today. Let's look at earlier this week. On Monday, May the 8th, actually that was last week, failure to raise debt ceiling would be an economic catastrophe, Treasury's Yellen says. So let's jump in and take a look at what's going on and what really happened the last time we had a debt ceiling debacle like we're facing right now. But before we do that, markets are about to close down a little bit on weak earnings and guidance by Home Depot and Target. So we know that obviously things are starting to slow down a little bit. Inflation is coming down a little bit. The economy, consumer spending is slowing a little bit, although we're going into the summer. People are going to be spending money traveling and things like that. But as far as the pandemic Home Depot sales and Target sales and things like that for the stay-at-home play, that's obviously unwinding. So the Dow was down a little bit right now, almost 1%, S&P down 0.33, NASDAQ kind of flat as tech stocks continue their rally. Home builder sentiment pulls out of negative territory for the first time in nearly a year. Home builders are rocking and rolling because there's no inventory out there and people are still paying pretty high prices for new houses and resale, especially in markets that are still in hot demand. You're still seeing right now in the spring market, you're still seeing multiple offers on properties selling in days. And then there's markets where properties are not selling at all. So let's jump in and take a look at the market here. And this is what happened. This is the economic catastrophe, markets, fire sales, all these things that Janet Yellen's warning about back in 2011. 18% on the S&P is what we saw for a decline. Let's take a look at the Dow Jones. The Dow Jones, and just for perspective, this was the 2009 financial crisis where the market dropped. The Dow dropped 54%. I remember this very well, watched it happen real time, entered the markets for the first time right here at the bottom. And in another video, I'll explain how I knew this area here was the bottom, and it wasn't anything magical. Obviously, it was pretty easy to figure out at that time because the Fed intervened and propped everything up. Here's the last time that happened, about an 18% decline. This is the 2011 debt crisis. And the NASDAQ was 18% decline in, the Dow Jones, S&P, about the same. Here's 2009 for the NASDAQ. And let's look at 2011, which is right here. 2000, here it is right in, where'd it go? Right in this area here. Here it is right here. So this area right here for the NASDAQ, July, August 2011, 16%. So it was 15, 16%. Certainly not an economic catastrophe, or as Janet Yellen said, open the foundations upon which our financial system is built and see the financial markets break with worldwide panic triggering margin calls. These declines are, pretty typical. I mean, that's pretty severe, 10%, but the last time we saw something like that, prior to the situation we were in after 2021, our typical corrections. Let's see what this one was right here on the NASDAQ. That's about an 8% correction right here back in 2021. Let's look at right here back in, again, in 2021 in the bull market. It was about a 12% correction. And the last time we had a big, obviously the pandemic, but before that was 2018, when the credit market started freezing up from too much quantitative tightening and rising interest rates. That was a 23% decline. So actually, the Fed raising interest rates and doing QT and announcing the end of QE is really what made the markets drop the most, not the debt crisis. But Bitcoin is another story. You have a perfect storm coming up for Bitcoin. You have the debt ceiling crisis, and you have the Bitcoin convention 2023 in Miami coming up here on the 4th and the 5th, or I'm sorry, the 18th and the 19th. So that's coming up here in a few days. So the last couple of times that happened, I marked it out in Bitcoin's history. Bitcoin does not like the Bitcoin conference. The price of Bitcoin does not like the conference. Last time in 2021, it dropped, let's see what that is, 21% Bitcoin dropped. And in 2020, it was right in this area here. 2022, I'm sorry, that was 2021. 2020 was canceled. That's 2021. Here's 2022. Obviously, that was the beginning of the final down leg for Bitcoin before hitting this low that's been put in, right, or the first low that was put in at 17 before the ultimate last leg down to the 15,000 range, which is currently the cycle bottom. And these are just the April cycles that had April here. This is April here. This is April, and then this is the Bitcoin conference of 2021, kind of marked out. And then I have the halvings marked out, as price typically will dip a little bit and then rise right after the halving, go into a bull market. It usually rechecks, some of the range lows before doing that. So the question is, will Bitcoin return to trend? What's interesting to watch is this trend line that we've drawn here. The price, once it lost that trend line of support, has now rejected on it and is staying under it. So we'll have to see if that continues, or if it Bitcoin can kind of plug along until it gets to the end of this flag here that many are calling a bear flag. Could be a bull flag, could be a pennant, rising pennant, can break up or down. It just all depends on what's going on. But with the Bitcoin conference coming up and the history of what happens to Bitcoin in the conference of dropping 20% or more, does not look good right now. Potentially coming back down, testing the longer macro trend here, connecting the 2018 low with the 2020 low, extrapolated out, that would be a $7,500 ultimate macro bottom. But if you go with the 2020 pandemic low through the most recent low in November, 2022, October, November, then the trend line extrapolates out, depending on where it touches, could be 19, 20,000. And then I know there's a lot of technical confluence for that being a range where Bitcoin could return to. Let's look at the Dow Jones, staying below trend right now. NASDAQ still above trend, continuing its run up here, and the S&P ranging below trend right now. And here's what's interesting about some of these is the Fibonacci levels. And right now, the S&P rejecting on the 0.5 Fibonacci. The NASDAQ, let's see where the NASDAQ stopped. Right now, NASDAQ working its way on, broke through the 382, working its way to the 0.5. And let's see where the Dow has decided to turn around right now. On the Dow, it found support on 382, broke through the 0.5, and has wrestled with the 618, ultimately losing the 618. Next stop back at the 0.5. So interesting to look at these Fibonacci levels on the markets, and we'll take a look at Fibonacci levels on Bitcoin. I know a lot of people don't believe in technicals for cryptos and for the markets, but the algorithms, the programmatic trading bots and algorithmic trading bots, can't get those words out. These are the levels that are put in for those for automated trading. Fibonacci levels, trend lines, moving averages, things like that. So if we just take a look at general moving averages, you got your 50, your 100, and your 200. And right now, Bitcoin finding support on that 100. So let's turn this into Fibonacci and take a look at what that represents right now. So if we look at ultimately from this last pop right here to the range low here, and let's just put some Fibonacci's on that. And you can see it's the 382 that was the support level, and now ultimately lost the 382 on the Fibonacci. And then if you look at from the standpoint of, let's get rid of this right here, and let's look at the retracement from the bottom of the cycle up with Fibonacci. And this is what's really interesting here when you look at these levels where price gets hung up. So you can see right here, the first level was the 702, where it kind of bounced around, broke up above all that, came back down, touched that 702, and then broke through everything, and now getting hung up around that 236 level of a retracement, which oftentimes is, potentially a full, pattern reversal. If we look at it the other way, again, from a peak retracement, whoops, wrong chart there, hold on. Take a look at it again from here, peak to trough. Right now it's the 236 on the main cycle. And then if we look at just this range right here to the range low, then still on that 382, hung up around the 236, broke through, hanging up on that 382, Next stop is the 0.5, then the 618. And if you look at, the history of Bitcoin from the peak to the trough, you can see all these levels coming into play. I keep doing that with the wrong measure. Let me get the Fibonacci here. A technical analyst I am not. I am not a technician, but I find it interesting if you look at how price reacts with the Fibonacci levels all the way down. So here's your peak, to the trough, the first level right here at the 786, second level bouncing up the 702, third level right here at the 618, finding support on the 382, breaking down, finding support on the 236, all the way down, back up to the 236. So really interesting how these Fibonacci levels come into play on some of these charts. So if you look at different assets, different stocks, cryptos, the major averages, you'll see those Fibonacci levels kind of coming into play, as well as the moving averages all across the board. So interesting stuff to watch. At the end of the day, if the government continues to drag the debt ceiling debate on, you'll probably see markets drop 10, 15%, maybe 20% like they did. And then with Bitcoin conference coming up, Bitcoin the last 3 years, or last 2 years of the Bitcoin conference has dropped 20% or more. So you can, the probability looks like we're in for a little bit of downside here for the next couple of weeks, and which leads into the whole sell in May and go away. So other than that, I will be on a Twitter Spaces tonight with Gareth Soloway at 7 p.m. Eastern Standard Time, Danielle Campostella, a couple other people. So go check out Twitter and check out that Twitter Spaces with Gareth Soloway and a few other people. It'll be a lot of fun. We'll be talking all things macro, stocks, real estate. We have a geopolitical expert on. We can talk about some world affairs, things like that. So I will see you on the next video and on Twitter Spaces tonight.